Welcome back to Investing Talk Podcast. Today, we're focusing on a company that's absolutely central to the tech world, Applied Materials. We're going to be exploring their upcoming earnings report, what the market is really expecting, and maybe what signals you need to keep an eye on. Before we jump in, if you find this valuable, please do hit subscribe, like the video, leave us a comment. We really love hearing from you. And hey, if you appreciate what we do, maybe consider buying us a coffee. It genuinely helps us keep doing these analyses. Also, if there's a specific company you want us to look into next time, just drop its name in the comments.
That's right. Applied Materials. I mean, they're a huge player in semiconductor equipment. Their results are coming up very soon. And yeah, it's a big one. We'll be looking at, the analyst numbers, sure, but also their track record, what's happening in the industry right now, and maybe sketch out a few potential scenarios for after the report. It's all about helping you understand what's actually important here, beyond just the headlines.
Okay, let's unpack this then. When exactly are they reporting, and what are the sort of headline numbers analysts are watching?
So Applied Materials is scheduled for aftermarket close on Thursday, August 14th, 2025. For revenue, the consensus is looking for $7.21 billion.
Okay, $7.21 billion.
And earnings per share, EPS?
Right, EPS. The consensus from, I think it's 12 analysts, sits at $2.34. Now, what's kind of interesting, though, is you often get these market whispers numbers floating around that are maybe a bit higher than the official consensus.
Ah, the whisper number, yeah.
Exactly. And while our sources don't cite one explicitly, you could infer, based on how markets behave, that it might be somewhere in the, say, $2.36 to $2.40 range. It's not official, mind you, just a reflection of maybe some underlying optimism out there.
Right, a bit of positive sentiment baked in, perhaps. And what about the company's own forecast? What did Applied Materials themselves say to expect?
Good question. Their own guidance for this quarter, Q3 2025, put EPS in a range between $2.15 and $2.55.
Okay, so that $2.34 consensus fits pretty neatly inside their range then. It does, yeah.
Yeah.
Comfortably so, which, sometimes suggests management might be guiding a little conservatively, setting the bar somewhere they feel confident they can clear.
That makes sense. Build that track record. So speaking of track records, how have they actually done against expectations recently? Do they tend to surprise?
Well, this is where it gets pretty positive, actually. The historical data looks quite strong. In the last 4 quarters, they've consistently beaten expectations.
Consistently?
Yeah. For example, last quarter, Q2 2025, their actual EPS came in at $2.39. The estimate was $2.31, so that's a 3.5% beat.
Yeah.
And while we don't have every single number for the prior quarters right here, the overall pattern points to them delivering these positive surprises quite regularly.
Right, so they've got form for beating the street.
Yeah.
How does the stock tend to react when they do beat? Is it a quick jump or?
Typically, yeah, the reaction has been positive.
Yeah.
Often you see an initial upward move right after the results come out. And lately, with the tech sector having such strong momentum, those initial gains have often held up pretty well, sometimes even building from there. It hasn't just been a quick pop and drop.
Okay, so the beats seem to stick, helped by the sector tailwind. Beyond just hitting those quarterly numbers, what about the underlying business trends? Is the growth solid?
Oh, definitely.
Yeah.
If you look deeper, the fundamentals look robust. It's not just about beating estimates by a cent or two. That Q2 EPS, the $2.39, that was up almost 14% compared to the year before, which was $2.09.
14% year-over-year growth on the bottom line.
Nice. Yeah. And revenue in Q2 was $7.1 billion. That's up 6.8% year-over-year. Plus, they reported a really healthy net margin in Q2, 24.06%.
Wow.
And get this, a return on equity, ROE, of 40.15%.
40% ROE, that's huge, isn't it? Especially in this kind of capital-intensive industry.
It's exceptionally strong.
Yeah.
It really speaks to how efficiently they're using shareholder money to generate profit. Very impressive financial management.
Okay, so the numbers paint a pretty healthy picture internally. What about externally? Any big company-specific news this past quarter, or has it mostly been about broader industry stuff?
It's interesting. Our sources don't really flag any major company-specific headlines, like a big acquisition or a massive new product launch during the quarter.
Huh. So, kind of quiet on that front.
Seems like it. The focus appears to have been much more on, the ongoing semiconductor capital spending cycle. How much are chip makers investing? That seems to be the main narrative.
Right. So their fate is really tied to that bigger industry picture.
Very much so. And that picture, well, it's largely positive right now. Demand for semiconductor equipment is still strong. You've got AI adoption just accelerating.
Yeah, AI everywhere.
Exactly. And you've got chip factories, fabs being built or expanded all over the world. Both of those trends directly drive demand for the kind of equipment Applied Materials makes.
So they're right in the sweet spot for those big secular trends.
Pretty much. Especially things like advanced packaging for AI chips, foundry equipment, that's their bread and butter.
Okay, so strong tailwinds from AI and fab buildouts. Are there any clouds on the horizon? Any headwinds we should be aware of?
Well, sure, there are always risks. You've still got the broader macroeconomic uncertainty kind of lingering. Nobody's quite sure where that's headed definitively. And the whole China trade restriction situation is always there in the background.
Right, those haven't gone away.
No. But that said, our sources suggest these haven't really hurt their recent results significantly. So they seem to be navigating it okay for now. On the plus side, supply chains have mostly normalized, which helps them actually build and deliver the equipment efficiently.
Okay. So some potential risks, but they seem manageable so far, and the overall sector momentum is still the dominant force.
That seems to be the broad consensus, yeah. Their track record of beats, plus the strong sector story, means sentiment is generally leaning positive, despite those moderate risks.
Got it. Now, thinking about the stock itself heading into earnings, what does the chart action typically look like? Does it run up beforehand? And what about implied volatility? How much of a move is the options market expecting?
Specific chart patterns right before earnings aren't detailed here, but, based on historical trends for a stock like this, with a good beat history and strong sector, you'd often expect it to be fairly stable, maybe drifting slightly higher into the report, reflecting that positive anticipation.
Okay, no crazy run-up usually, just quiet confidence maybe.
Something like that. Now, implied volatility, that's what the options market is pricing in terms of a post-earnings move. Again, no specific number quoted for this report in our sources, but typically for semi-stocks like Applied Materials, the market might imply a move around, say, plus or minus 6% to 8% after the earnings drop.
6 to 8%, either way. Okay, so the market is definitely expecting some reaction. It's not expecting it to be a non-event.
No, definitely not. That's a pretty standard expectation for a potential swing in this sector around earnings.
All right, so let's play out the possibilities. What does a really bullish outcome look like after the report? And conversely, what would a bearish scenario involve?
Okay, the bullish case. Ideally, you'd want to see the classic beat and raise. So EPS coming in above that $2.39 mark from last quarter, revenue beating the $7.21 billion consensus, and crucially, guidance for the next quarter that's strong, at least meeting or ideally exceeding what analysts are currently expecting.
So beat the current quarter, guide higher for the next one.
Exactly. And maybe some bonus points if they report better than expected gross margins or announce some big new orders from major chip makers.
Yeah.
That would really fuel the fire.
Okay. And the downside, what does the bearish case look like?
The bearish side would be, well, a miss. EPS may be coming in below $2.30, revenue falling short of that $7.18 billion from Q2, maybe even missing the $7.21 beat consensus. Or, and this is off the real killer, even if they beat slightly, if their guidance for the next quarter is cautious or lowered.
Right, guidance is key.
Absolutely. Any hint of margins getting squeezed or customers pushing out orders or maybe some specific weakness linked to China, any of that could hit the stock pretty hard.
Okay, that lays out the stakes. So boiling it all down, if you had to pick the single most important thing you'll be watching for in this report, what is it?
For me, it really has to be the forward guidance. Specifically, what they say about new orders and bookings growth compared to expectations. The past is important context, sure, and the current quarter's numbers matter. But it's that outlook, that signal about future demand and customer spending plans that tells you the most about where the business and maybe the whole industry is really heading.
The forward look. Got it. So putting this all together, where do you land? What's the overall feeling about Applied Materials heading into these earnings?
Weighing everything, our analysis leans, I'd say, neutral to bullish. If I had to put a number on it, maybe a 7 out of 10 confidence score on the positive side.
Okay, 7 out of 10. Why not higher or lower?
Well, the positives are strong. That consistent beat history, the really robust demand drivers from AI and fab expansions, their own solid guidance range coming in. But you have to temper that slightly with those ongoing risks. The macro picture is still a bit fuzzy, and the China situation is always a potential factor. Those moderate risks just keep it from being a full 9 or 10, keeps the conviction just a notch below maximum.
Makes sense. So Based on that 710 neutral to bullish view, any thoughts for folks considering what to do around the earnings?
Well, it depends on your risk tolerance, obviously. If you're more risk averse, the sensible thing is probably just to wait, see the results, see how the market reacts, then decide. No need to gamble right before the numbers hit.
The dust settles.
Exactly. Now, if you're more comfortable with risk, maybe you look at options. Given that expected 6–8% implied move, strategies like a straddle or a strangle, which profit from a large move in either direction, could be considered. They play in the volatility itself.
Right. Betting on the size of the move, not necessarily the direction.
Precisely. But, and this is crucial, even with all the positive signs, holding any stock through earnings carries risk. Headline risk is real. So whatever you do, proper risk management, position sizing, maybe stop losses, that's absolutely essential. Don't bet the farm.
Wise words. All right, that brings us to our final thought for you, the listener, to ponder. What do these earnings reports, not just from Applied Materials, but from all these key semiconductor players, what do they really tell us about the true health of the broader semiconductor industry? And maybe about the actual pace of this AI revolution we keep hearing about, something to think about. We'll certainly be watching closely.